All right. How's it look? Audio good? See the screen? Let's see, showing monitor number 3. All right. Good morning. All right. Hey, everybody. How's it going? Welcome. Cool. Thank you. Let's see, guys. Yeah, so I kind of feel like if you saw my free video last night, I feel like crash canceled for now. It still could happen, but I think it's a time where we got to kind of shift the trading tactics. Jerome Powell came in and he's talking tough. As I said in the free video last night, I give him a lot of credit for coming in and saying I'm not afraid of a stock market that's not at the all-time highs in order for me to be hawkish on raising interest rates, because that's pretty much been the theme with the Bernanke and Janet Yellen. As long as the stock market's at all-time highs, we're fine about talking about raising rates. So we'll see if that's actually the case. And we got a nice outside day reversal here in the S&P yesterday. Bonds continue to break down, but they didn't get as much of a response yesterday as you'd expect, because I think they're in a very oversold condition. So I don't fault the bond market very much at all for the lack of downside reaction, because it's already made a pretty significant move. So the whole question here is, as I'm just going to kind of recap what I talked about. I thought last night's video was, very reflective of, where I am in this market. So it's going to feel on my end a little redundant saying what I said last night, but this is just kind of the market environment that we're in. I'm shifting towards a sideways consolidation for H1 of 18, so the first half of 2018. The operative pattern here is this orange circle 4. I'm presenting a triangle. Triangle is a 5-wave higher, low, lower, high pattern in the Elliott Wave world. Could be something like this. It could last definitely through Feb, March, April, May. I mean, you could definitely be in the first half of 2018. So the environment of low vol, making money just by sitting on your hands, investing, that we've seen over the last couple of years, I firmly believe that's over, and we're going into a trading market, which is awesome. So we put option trades on, butterflies with our subscribers yesterday to start to take advantage of this. So the pattern that I think is at work as I get off the daily and head over to the weekly is this. I think we have a bit of a triangle to contend with here for the next couple months. And let me just say before I continue, it's early for me to call this a triangle. It really could be anything. A wave 4 is usually long, sideways, filled with a lot of head fakes, very frustrating for the unaware trader, somebody who's not who's just not schooled in the Elliott Wave theory. I know that this should be a very challenging landscape for investors, but for traders, it's going to be great. But in that fourth wave, there's a couple possibilities. The tendency is either for a triangle like that, as I mentioned, or some kind of complex, which is essentially an Elliott Wave correction, which could be any of the 3 Elliott Wave corrections. One Elliott Wave correction connected to another Elliott Wave correction, which is a WXY count. It can be anything, okay? It could be a triangle, it could be a complex, it could be a flat. It doesn't matter. The point is, you'll know the environment should be filled with overlap, filled with head fakes, filled with uncertainty, filled with a lot of frustration from the unaware trader. But again, that's great. So we shifted trading tactics pretty aggressively in the last couple of days. So I think this might be what's happening. I hope I'm wrong, and I'm going to tell you why. Once the triangle does, or the wave 4, whatever it winds up being, resolves itself, then we should get the final wave 5 of 3 move. And at that point, we drop away quite sharply. So okay. Visibility. Let me just hide some of this stuff. Okay. So the move that I was just referring to was just in here. Now we're up on the weekly chart. And as I'm saying, I think we might have a little bit more consolidation before we complete the 5-wave move that originates from 2010. And at that point, then we're going to set into a pretty significant wave 4 correction, and that's going to drop you 30, 40, 50% in the stock market. I hope I'm wrong. I really do, because I love trading directional volatile markets, and that is the alternate count, as I'm going to show you here. The top might be in, and I don't know. Okay, I don't know. That is the count that says the 5-wave move from the credit crisis low is complete. Okay, I don't know. I hope I'm wrong. I would love to trade an S&P that goes from 2,800 to 1,000 or lower, because that's when a lot of money is made. I love trading through the 2007, 8, and 9 credit crisis. When I was trading on the hedge fund, that was great. That was a lot of fun. Terrible for investors who are losing money. Breaks my heart to see that, but that's coming again soon. So, as we get off of this blue weekly down to the daily, the makings are in. We could potentially see this as a 5-wave decline followed by a 3-wave move back up. The S&P has not exceeded the 786 retracement, while so far we have done an outside reversal week. Today is Wednesday. If we get another 2 days of selling and we close below last week's low of 2756, then we have a nice outside week reversal, sub 786 retracement, and that could potentially drop us into a wave 3. This is the point that I really want you to take away, and especially for anyone who says, Elliott's too subjective, it drives me through the absolute roof, because I don't know if we're going to drop in wave 3 significantly lower, or we're going to drop in a wave C kind of lower. Either way, I think we go lower. Okay, this one says we should drop, probably down to the 26 to 2500 level. This one says 26, 25, no problem, possibly down to 22. Okay, so don't know and really don't care. Not my job. My job is to get my subscribers paid on this move, and that's what we've done. And I'm going to stop talking in a minute and look at questions. So a couple trades that we have on right now. In the SPX, we are still long Amazon. That's a long hedge, but we did start to move into some index butterflies, unbalanced flies that favor the downside. So this is a more directional. I talked about this in the free video last night. This one is a 29 March, 2680, 2700, 2725 put fly. And as we go over to the risk profile here, oh, sorry, let me get rid of the camera. Okay, this is the first one. This is a little bit more of a directional fly. This is your T plus today line. So let me go out to March expiration just for whatever. Okay, so this is going to be our P&L line for March 16th. So we'll make money below 27.59. The purple line continues to rise, and if we drop down to 2,700, I'll be up $800 on this trade. And if we can hold a little further, that's when you start getting, real profits. Okay, so that's a little bit more of a directional trade. This trade cost me, I don't know, $500, $800 or whatever, and we're going to try to make double or triple that on this trade if we get that move. The other trade that we put on was more of a fly, an income unbalanced fly. This guy basically just trying to capture this range over the next month or so. All of this is profitability between 2780 and 2650 here. This is all profitability. And again, if I'm right and the top is not in, but in fact we are in a corrective 4th wave, that's the kind of strategy you want to be employing in this kind of market, which I think is going to be very filled with a lot of overlap back and forth, sideways, wave forward, torture you, kind of environment. Okay, taking a breath. Let me look at these questions here. Oh, so Brian asks, first one, are you short SPY? Yes, that's kind of what I was saying in too many words. Oh, shit. That's what I was saying in too many words. So overall, I am negative delta in the SPX. Positive theta, but negative delta, which makes us short the market. So yes. Right, what are the questions? Let's see. Wow, Daniel was... Can you guys see these? As I put these questions up on the screen, can you see the questions that I'm showing you right now? Can you see the chat screen that I'm showing you, or no? No? Oh, that's annoying. Sorry. I got to set it so you guys can see the questions. It's annoying. I got to do that. So I'm just reading these questions. Tom, do you have any alternate accounts which have your wave A to be the entire fourth? Good question there. Let me take a minute on that one. I like it. I don't think that's going to work because... Good, and I'll explain what Tom's asking. Let's get off of this. What he's asking is, do you have any accounts that says this right here is all of wave 4? It's possible, but not likely, because you look at the time elapsed of wave 2. I mean, this guy took April 15th to June 20th, so that's 2 months, give or take. This guy lasted about a week. It's really short in terms of time proportion, so it's unlikely that that's all of wave 4. It could be, and we could go up to new highs, and as I said, this wave count is expecting to move up to 3,000. It's just expecting to move from much later. So possible, but not likely, but possible. I'll never say nothing's going to happen in the market. Let me just take a look at these other questions. Come on up. Rick, was it possibility the wave 4 is completed February 9th? I think you're just asking the exact same question, so good point there. Rob, Home Depot looks relatively weak. It has not recovered from the sell-off. Yeah, we'll take a look. I mean, Home Depot has been a ripping stock for a long time, but we can take a look at Home Depot. Using a cloud analysis, can you explain what red count versus blue count is? Sure, Paul. So what Paul's asking, Paul's hooked into our MotiveWave repository, which is basically my ability to share my Elliott Wave analysis with you via the cloud. And I always look at 2 scenarios in a market. I have my MotiveWave chart set up this way. I always look at a red count and a blue count. And the naming conventions are arbitrary. So this is just scenario 1 on the red, and then I have MotiveWave set up where if I just click this next tab over here, it's going to flip. You're going to see this red go to the blue. And this is a different wave count. So I always watch 2 scenarios in the market. I never go in and say, here's the only thing that must happen in the future, because that's ridiculous. So I always look at 2 possible scenarios, and then I employ the count that offers the best risk to reward setup. So they're arbitrary names. I just call them red count, blue count. Neither one is preferred, or the alternate count, just 2 different ways to look at the market. Oh, and that's a good idea. Sorry, give me a sec. I'm doing a webinar with Elliott Wave International tomorrow. I'm going to get you guys the sign-up link, and that's just an idea that I just want to write that down. EW, blue. Talk about the idea of blue versus red counts. Multiple scenarios. All right, just want to make that note. Good question there. Also, we are going to do, I think we're going to meet up next week for a session. If you guys want to get involved in this MotiveWave, this is like Elliott Wave that's never been done before in terms of discretionary analysis that is updated for you via the cloud. So head over to the analysis, trading analysis website, and then go to Marketplace right here, and then you can start to get involved right here. So MotiveWave platform is there. And then you'll want to sign up for the MotiveWave Cloud Sharing Program, which is right here. And this explains what the program is and then how to continue forward. But basically, any changes that I make on my MotiveWave workspace, I just go like this, chart, save to, and that sends it to the cloud. And then if your workspace is synced to mine, you just got those updates. Pretty awesome. Okay. All right. So from there, let's head over to the macro markets. I see some people asking about gold. So let's talk about bonds and gold and start to pull this macro picture together. And I got to bring up a different MotiveWave workspace. Okay, so let's talk about bonds. Again, the real reason for volatility. Jerome Powell came out pretty hawkish on the markets, but we didn't get too much of a downside response in bonds. But as I said, I don't fault them at all. I do see us coming down into a pretty good zone of support here in the bond market, down around 141 to 142 in the 30-year bond futures. And at that point, that oversold condition should be relieved and rally back up in wave 2. So it's been a very nice move. We need something that resembles distance traveled in wave 1, which is that, compared to wave 5. And your 5E1 is going to be right there at about 141.5. Okay, so that should be a pretty good little support zone. Generally, gold and bonds are correlated, but bonds have become weaker than gold has. And I don't know what that means. I think gold has an underlying offer to it, meaning there's weakness. With the Dow down 1,500 points 2 weeks ago, gold should have been ripping through the upside, and it didn't. I'm thinking that longer term gold, we are in a triangle that should resolve below 1,300. We are net short gold via another butterfly. It's a kind of safer way to play it while we are still range bound inside of this triangle. But based on this wave count, I think we should be moving lower in gold. And I do have the trade on. We did have a nice little 5-wave move down here in gold. So we are starting to get this impulsive party underway. And then we have a nice little 3-wave back. Minimum target would be downside 100% projection of wave 1 versus 3, which is at 1,300. And then if, in fact, this is a good impulsive drop, 1,280 at the 1.618 projection of wave 1. So that's actually looking pretty decent on the short side. Gold, done. Dollar. Dollar starting to threaten some strength. I am looking forward to being longer-term long the dollar for a longer-term holding. We're definitely pushing down into support, and validation is here at 84.12 in the dollar index. We should be holding this support level, and whatever fundamental reason is attached after the support zone is held is fine, whatever it may be, but we are moving down to support. The risk is small. I think the invalidation is at 84.10, so that's right there. So you're going to risk this distance right here to potentially make this distance. I'd like to be holding the dollar longer term, which I think is going to give us help and guidance on that short gold position. Now, I don't know yet if the low's in the dollar. I am going to entertain that it's 4, 5, and all of these levels are now complete, and the dollar's going to break out. However, I am going to allow that this wave 4 continues for a little while. If we drop one more time, that's going to be the low. So the low's either been put in here or we're going to have one more push, then we're going to go. So I'm remaining fluid here. That's the dollar and gold and bonds. That's a pretty good macro look there. Crude I also think is we did a nice ABC move up into an ending diagonal, and I think the crude oil market is ready to also continue lower. So I am remaining on the bearish side of crude, and if the dollar wants to put it in a low, that would be just fine with me. Okay, so that was the macro. Let me just see here. I'm just reading questions. I got to set them so you guys can see the questions. It's kind of crazy just to sit there and talk to yourself. Jim B, how do we get your MotiveWave chart synchronized? I answered that. You asked me that question 6 months ago. I think I answered it with this. Let me know if you need. It's just go to TradingAnalysis.com/marketplace right there. And here, I'll give you the link. There we go. Other questions? U.S. pound is symbol for bonds in IQ. Yep, Paul L. William. Oh, boy. On a daily, you have an ABC down from A wave. I don't know what chart you're talking about. I have 5 wave down from A wave, then an ABC up for B. Can you send me an email? And if it's a good chart, I'll put it up on the screen here. Or if you drop a link, Todd at TradingAnalysis, if you take a quick screenshot, I don't mind throwing it up here and we can take a look at the count. Mike G says no audio. Okay. Yep. Looks like we want to take a look at Home Depot. I think I have him in my list. HD. I don't think I'm tracking him that closely. Boy, I don't know about a stock that's underperforming. That's a pretty strong chart. Stock has gone from 50 to 180 in about 2 years. But I see what he's saying. It's definitely on the daily, underperformed on the way back. That's the whole theme. You know, that's the market that we're in here, guys. It's a tale of a market that everything is dropped. And then depending on how much it's retraced is, I think, once a top is found, how far it will react on the downside. The NASDAQ is like all the way back up to the highs, and Apple's back up at the highs. So the NDX and the Apple are like up here. The RUT and the S&P have retraced about this much, to about a 61%. International markets like Germany and what else? Canada, a couple others have retraced even less. So emerging markets haven't come back very much. So it's all, you know, how much have we retraced? And his point that we've only done about a 38% retracement off the top, yeah, that's quite weak. And then if you can identify something that looks like a 5-wave move off the highs, that starts to suggest that you might have a top in place. However, I don't see it in Home Depot. I see a big push back up. And then we did make a higher low here. So far, that looks like a 3-wave move. The ideal scenario off the top is this. 5 down, 3 up. There's your short for that. That's your ideal scenario. Home Depot, I kind of see it as a 3-wave move. So it's not ideal, but this is a very common kind of chart. Another one that looks like this is Facebook. We were short. I lost money on it because it did rally back. But if you look at Facebook, I mean, Facebook has only done a 61% retracement from the highs, where if you look at the NASDAQ, NDX, NASDAQ has done more than a 786 retracement. So there's the 786. So Facebook is definitely weaker. I was short, and I don't mind being short again. I lost money on that first trade, but any sign of this resistance zone in the NASDAQ starting to hold, we're going to go right back to work. Apple, on the other hand, has been very strong. Apple's come all the way back. I think, Buffett's in there buying. So I don't know what's happening here in Apple. I've been kind of leaving it alone. We're back up at the highs. Apple looks strong, but again, I'm not just beating the bare drum here. Amazon looks great. Amazon, I am long. I've got the put spread going on Amazon, short put spread. So we've got the 1450, 1445 put spread. We're short there, so that's fine. I like Amazon. I think Netflix looks great as well. Not tracking a direct wave count in Netflix. It's a tough one. But again, if you look at this, Netflix just made a new high. So Netflix looks great. Amazon looks good. Google is an underperformer. There's not much you want to do with Google on the long side because, look, okay, Google is retraced about a 61% retracement of this, where you've got the other NASDAQ stocks way up here. So Google's a pretty good underperformer. So there's a couple long stocks that we're going to focus on if the overall market does, for some reason, start to move higher. But I don't really see that happening. I see the market starting to push lower to sideways, and that's why we're putting Theta positive, Vega negative, and Delta negative trades on slightly lower. Okay, so let me just take some time here, answer any questions you guys have. Michael, do you have ES minis on MotiveWave? Yes, you have to. The thing with MotiveWave, you have to bring your own data. You've got to bring your own data provider. I use IQ, and there's your S&P futures right there, Michael. So absolutely. If I just go show extended data, it looks like the futures are rallying here a little bit. Sure. Yeah, Lowe's missed this morning. Yeah, I saw that. Possibly Tina. NASDAQ heading for double top, possibly. Oh, Tesla, there's a good one. I like Tesla. It's not like outperforming on the top side. I like it for a longer term holding. And it's one of these stocks that I am going to go to work on if we can see the broader market stabilizing. I'm a little confused on Tesla right now. I really was hoping we'd do one more push down to complete the triangle for wave 4. And then I think Tesla should have a beautiful move higher. I've just got to complete the end of wave 4, and then we should be able to push higher here in Tesla. So I like it. It's definitely not up at the highs, right? We're well off the highs with the NASDAQ's above the highs. So it's underperforming that way. But if we can get one more push down to 320 longer term Tesla, I think looks good. And before you guys go, let me just drop this in. As I said, big webinar tomorrow with Elliott Wave International. So let me just give you the sign up link for that. It's going to be 3 p.m. Right there. So I'm going to copy link. I'm going to drop this in. So 3 p.m. tomorrow. You want to sign up so you can get the recording if you aren't going to be there. So that's going to be tomorrow, 3 p.m. We're going to be talking about some really cool things. And the relationship with Elliott Wave International has been great. I got to tell you, really fun working with those guys. Great team there. Kind of feels like I'm home. You know, it kind of feels like, you know, you could just like let's say I'm a freak, and it's just okay to be me. You know, Elliott Wave is not mainstream, obviously, and you always got to kind of temper it, but it's fun just to let the Elliott Wave flag fly high in the at the Elliott Wave International world. So it's good. My latest vlog is up. If you've got 15 minutes of your life that you want to waste, never get back, just kind of our family trip to Colorado, just whatever if you're interested. So that's some key announcements. MotiveWave repository is the other big thing we're working on. That's under the marketplace to get signed up. Right there. This is cool stuff. Never been done before. So basically, it's hand-drawn Elliott Wave analysis, not computer-generated, but it's done for you automatically. So pretty cool stuff. Oh, Terry, thank you. 2 p.m. EST, thank you. Terry keeps me on track, and Terry is the star of this video right here. Terry really keeps me on track. He's the star of this video right here, just kind of talking about the program.
Introducing a new feature.
Did a really nice job with this. So be sure to check that video out. Give it some love. Here's the link. 2 p.m. Eastern. Thank you. What other questions? Comments? RUT. Okay, yeah, I'll do the RUT for you there, John M. Market just opened. The RUT looks just like the S&P. And it's at a 618 retracement. It briefly poked through. It's a little stronger, but it's, you know, it's right at below the 618. I'm looking at this as a possible C wave here. You know, I have a hard time thinking that this thing is just going to continue through the 786 without really being tested. So it's pretty basic count, really not much to it. Let me get off that down to the 30-minute. Here it is. I'm looking at this as a 5-wave move here, just like that. And I'm just kind of leaving this be. I'm letting this guy float here a little bit. We could still be in the B wave. Maybe that's it. I don't know. But we're definitely facing resistance into the 786 right here. And if we start to break down through 1528, then I know we're in trouble. But, you know, I'm not going to be upset if this happens right here and we do the ABC up to complete B. Okay, so I'm really just trying to loosen my grip on the market and just kind of let it breathe in here and let the positions do what they want, because I really do feel like we're kind of falling into this environment. It'd be good for trading, okay? Yeah, sorry guys, 2 p.m. I misspoke. 2 p.m. EST. Yep, sorry. Yep. Thank you. I do record these, Tony. I do record these webinars. And I even put it on yeah, or what the hell am I talking about? I put it on YouTube last week, and I will put this one up on as well. So just be sure to check the Trading Analysis homepage. Last week's should be here. And then if you don't see it, just go free trading videos. And oh, you're making making a liar out of me. Sorry. I didn't post it up there. It should have been up there. It'll be up here. The other thing you can do is check my YouTube channel, and you'll see the recordings there. Okay. So that'll be up there. All right, guys. We'll leave it there. Thanks. Hope that was helpful. Looks like markets are coming in a little bit. So up about 0.5%. That's fine. Let's see. Activision coming in there. Amazon up 0.5. AMD, Netflix. Okay. Decent open. Got to see what happens. Resistance for today for me. Again, we have the 27.95 at that 786 retracement. So I am not going to be heartbroken if we want to go up and test 27.95, which is at 786. So as I said, I'm just kind of loosely, I'm going to let this guy breathe in here. I don't think we're just going to go explode to a new high. I think it's going to fail into this zone. So that's my plan. Right or wrong, that's how I'm going to plan it. That's how I'm going to play it, but we're always controlling risk. Yeah, cryptos are just doing nothing. Just nothing. If they start to take another leg lower, I'm probably just going to go back to shorting. Go back to shorting again. But you know what? That's actually a decent, never mind. That's a pretty good flat there in Bitcoin, actually. I mean, they had a decent move, but they've just been, you know, for cryptos, it's very weird to see them so weak. Ethereum is a chronic underperformer, something I'm very concerned about. Really just can't get any inspiration. We're in positions where we should be moving higher in third waves. We have Litecoin on. Average entry of about 206 and we're at 210 right now, so that's fine. Just kind of messing around. We should be moving higher. And they're just kind of lacking upside inspiration right now. So, all right, we'll leave it there, guys. Hope that was helpful. Thanks. And lots going on at Trading Analysis, so be sure to check the website. See you tomorrow at the Elliott Wave webinar. Have a great trading day. And if not, I'll have to catch up with you next week. See you guys. Bye.